Now, joining me to talk about the current status quo and how things are likely to pan out based on the trends that are emerging, I've got Nirav Sheth, who's the Chief Executive Officer of Institutional Equities at MK Global Financial, as well as Ajay Bagga, who's market veteran and has watched several elections. Both of you have watched so many elections, and you've also studied what the possible implications would be for India. Nirav, will come to you first. We've already seen some sort of a reaction to the initial trends coming from the United States in the Indian equity markets, the IT pack as a whole running up. Not sure whether or not they're reading this as positive in terms of a Trump victory. What do you think is panning out in the United States? Which way do you think that the winds are blowing, first of all?
Two things. First of all, I think we have to assume, and it's very clear that Trump is pro-equity simply because of the fact that, he propagates tax cuts and stuff like that. So when we talk about equity markets in general, Trump coming back to power should be seen as a risk on trade. Now, you have to keep in perspective that we had a serious correction going into the presidential polls, and that was largely because of the fact that you had almost a 4% rally in DXY, which means that when dollar becomes stronger, and largely on the back of both a stronger economy, but also because of the fact that Trump is coming back to power, emerging markets usually be on the flip side of the trade, which means that you had close to about $12 billion of pullback in FI money. Sitting from where you are, the logical trade for the next near term and the medium term would be some sort of pullback in equities. This is the first level of reaction. Then obviously you will get into details in terms of what are the policies Trump is going to follow and so on and so forth. And this is not, it is not very, very easy to templatize this. It's going to be a bit difficult, especially around tariffs and what does it does to bond yields and what it does to dollar. We'll see as we move forward.
Absolutely, Nirav. I have a few follow-ups to that, but I want to get Ajay's view as well on how he's reading the signs right now. Some people are already calling it. Ajay, would you do so, or would you wait till the final vote is counted?
Because the 7 swing votes, swing states will have very low difference in votes. So I think Georgia and North Carolina, because there are not enough votes for Kamala Harris to now catch up, those have been called. Pennsylvania has just been called. And if that is through, then he's at 267. And more or less he's through to 270 then. So overall, very high probability that Trump is the next US president, Alex, as of now.
Okay, so I'm going to come back to you on that one. There has been quite a bit of talk in the run-up, the Trump trade in the US. There are certain stocks that have rallied here in India as well. Is it that cut and dry? Because in the run-up to the election, both of these presidential candidates have, in broad brush strokes, talked about what they want to do, but there are no specifics. One would assume that Trump is going to be more protectionist. He's going to have more tariffs. He has had in the past. He's going to be hard on China, which he has done in the past. So would you be able to take some of those things and gauge what could come about, or would you be a little more cautious as you head into trade, perhaps in the next couple of days?
That's for me, Alex?
Yes, for you.
Yeah. So, one thing is by today, I'm expecting that in the next few hours, Trump will give his acceptance speech because it's looking very clear now. And hopefully, as he crosses 270, Harris will also concede. So it takes out a big uncertainty from the market. So Indian markets, we have been hit quite badly over the last 4 weeks and with FI outflows. Now, does it change the ground reality? No. The dollar is strengthening today. We have seen Mexican peso going down 3%, yuan down 1.2%, euro down, yen down, the Hong Kong market going down. So that anti-China is showing up in all the Trump trades. Crypto is going up because he's talking about less regulation. He will defund the regulators The US market will see a lot of frothiness continuing with this Trump trade. Cryptos are doing well. Dollar strengthening is negative EM flows, and then it will be negative for the Indian FI inflows as well in the short term. Now, that is the rhetoric. What happens when Jan 20th he actually takes over? China, I think there's a consensus across Democrats and Republicans. Trump is more, you can say, of an outlier with his 60% tariff talk. But that is also a negotiation tool to make China open the rest of its market so they can balance their trade balance. Otherwise, US is not going back to making furniture or making computers again. All the stuff that China is doing or the rest of the world is supplying to the US, despite all the talk of moving manufacturing, the high-end manufacturing, the value-added manufacturing, they would like to bring back into the US. But the commoditized manufacturing is not going to be back in the US. So we have to see it more as a negotiation tool by Trump. For India specifics, we have to see, I would say overall it's more positive than a Democrat Harris coming in for the Indian markets. Flows will continue to be constrained with the strong dollar. Most of the market went in long dollar and long US markets going into the the elections. Trump trade was the consensus trade, and it has worked out. The Fed rate cuts, Alex, also get little postponed and little slower because inflation will catch up. The Trump impact has been calculated by non-partisan bodies as about $7.8 trillion over the next 10 years, while Harris was $4 trillion. So there is a big $1 trillion tax cut which was expiring end of 2025 that will get rolled over because Trump plus a Republican majority in the Senate will allow him to pass these tax cuts. So Trump tax cuts are on the corporations.
That's a fair point. That's a fair point. And the important point that you just made also is what's happening in the Senate. Nirav, I'm coming back to you. A point that Ajay just mentioned is on the flows, and 1.3 plus lakh crore of outflows on a net basis from the equity markets in this run of 27 consecutive sessions. And this is unprecedented, right? But one would assume that part of that is also on account of the uncertainty before this election result. It's more or less moving towards certainty. Given that we're looking at a high probability of a Trump presidency, and we're looking at a stronger dollar, we're looking at higher inflation, and therefore one would assume relatively higher yields. How do you think those flows will pan out towards the end of this year and heading into next year?
See, I am very constructive on the FI flows. As a matter of fact, eventually two things to it, right? You're also looking at the prospect of a growth differential, and then you look at the prospect of currency depreciation. You also have to keep in mind that, what Trump is essentially trying to do. I mean, if you talk about his stated policy directive, he's been talking about the fact that we'll have 20% tariff on everything that's imported into the country and 60% on China. What it essentially means is that you're just taking a price level and resetting at a higher level. In terms of competitive dynamic, nothing changes. As a matter of fact, India simply gets better because then the differential between China and India will go to an extent about 40%. That is number one. Secondly, but the stated policy objective of Trump is also that he wants a weaker dollar, right? So, and we also have to keep in mind that all the currency moves, all the bond yield moves are in effect, self-limiting. The yields go up, it sort of catches on and starts curbing the growth. Likewise, when you got a stronger dollar, that is disinflationary, stuff like that. So it's not that you will have a significant leeway for a stronger dollar. And like we always said that, we also have to keep in mind that US is now running a trade deficit after almost running at full employment, right? There's not a very happy situation, right? So there are too much dollar floating around. So I don't have a great view on how dollar is going to play out. And from that perspective, I would like to believe that probably the dollar strength will stall, bond yields could still be higher, uh, but that also till the time that it starts impacting the growth of US, and then again that will sort of reverse. Uh, so to your question, uh, $10 billion is a lot, and for a country like India, when you had some miss in earnings in the current quarter, nothing structural when you look at 26 and 27. Uh, Also keep in mind that last 2.5 years, the net inflow of FI is zero. So, a lot of money comes in, a lot of money goes out, right? And if you are under-invested in India, where the hell are you going to go?
One would have said just a month and a half back China, but I don't know if that's going to continue to be the case given the result that we're heading towards, and whether or not, of course, that economy starts firing on any cylinders at this juncture. One is waiting for what is going to be announced on the fiscal side there. Nothing has come to pass. The question is, how much does policy in the US affect us here in India? And Ajay, I'm curious about what you think. As an investor, primarily in India, how much attention do you pay to what's happening in the US? I take the point that yes, pharmaceutical industry, big exporter to the United States, several companies, and so therefore pricing is an issue over there. I take the point that IT, Infosys, a large chunk of its earnings coming from the United States, and several other IT companies. So IT and pharma. A few other sectors one would assume, yes, also has some bearing. But then a large part of what's happening in India is the earnings story here, the valuation story here. So how much attention would you pay to what's happening in the US?
No, it is important, Alex, because over the last 4 years, our exports to the US have gone up 44%. So China plus one might have benefited a Mexico or a Vietnam or an Indonesia much more than us, but we have benefited. So 44% better exports to US, and on those, if a 20% tariff comes in, then you have a re-rating of significant sectors of the market. Second, on immigration, Trump is quite, tougher than the Democrats. So the H-1B visas, the spouse visas, the naturalization process, of course, the Indian manpower exports are on the higher end. So hopefully he will give some amount of leeway to the Indian manpower sitting in the US. So it is a change in policy. It is pro-US corporations. It is pro-isolationism. It is protectionism, anti-globalization, less of trade. All those issues have a knock-on effect. The immediate effect you're going to see is China depreciating its currency. It happened in 2016-17. They are going to do that. They're going to bring down the yuan and make it cheaper to offset the impact of the Trump tariffs. Now, that will have a second order effect on Asian currencies, Indonesian to Malaysian to Korean. You will see currency depreciation, and as will the rupee. The other issue will be the Fed will be now wary of cutting rates fast and furious. They will go slowly. So the RBI doesn't cut that fast. That again becomes a drag on our economy. So it is interlinked to that extent, Alex.
It's a fair point. I just want to talk about a few of the numbers that I'm seeing on the screen right now. And if we can pull up that map of the United States just to give you a picture, a snapshot of how things look. Of course, most of the color that you will see on that screen is in fact going to be red. And that really is the story of the hour right now. But most importantly, if you can see some of those states that were highlighted in the run-up to the elections, the likes of Arizona, it's still very close. The gap is actually less than 1%. But in the others, the likes of Georgia, it's pretty much already been called for Trump because the gap is 3%. You have Michigan, where Trump is leading by about 6%. You have Nevada, where the gap is about 4%. You have North Carolina, where the gap, as Ajay pointed out a short while back, it's been called because the gap is about 3%. In Pennsylvania, and that was seen as a very crucial state, to the last day, that was yesterday, you had both Donald Trump as well as Kamala Harris campaigning in Pennsylvania right to the last few hours, there the gap is about 3% in favor of Trump, and you have Wisconsin as well, where the gap is about 4%. So the way things are looking, ultimately, there's just another few electoral votes that Donald Trump needs to take the walk into the White House. I'm curious about what music he's going to play this time around. We'll wait till that happens, though. Before we call this, though, we still had a scenario laid out, and I'm going to ask Harsh to join in to give you some perspective on what things would mean for Indian stocks for a Kamala Harris win as well as a Donald Trump win. Harsh, what have you picked up?
Policy stability, Alex, if Harris were to come to power, but currently looking increasingly likely that Trump will win. If Harris does win, though, you could see a renewed effort towards renewables, and that could see some Indian companies, the likes of Avari, the likes of Premier Energies, come to the fore in terms of taking that as a good opportunity. But what if Trump wins, right? Policy stability goes away. You're going to likely see the dollar getting stronger. All exporters will likely benefit if the dollar gets stronger. You will also see possible tax cuts in the US. So any company having a subsidiary in the US likely will have to pay lower taxes, and therefore margins will improve for some of them. In terms of tariffs, you could see higher tariffs, which is bad for apparel companies, chemical companies, anything that's exported to the US, but largely tariffs are applied on these two pockets, these two buckets in terms of exports. A possible insurance coverage dilution, if that were to happen, pharma stocks could see an impact. You have, of course, the higher tariffs impacting Welspun, Gokaldas, Deepak Nitrite, and the like, but an adverse impact on pharma companies, Sun to Loris, pretty much all pharma companies exporting to the US, and all of them could likely see a bit of an impact as a result of Trump coming to power.
Okay, so a few stocks have been mentioned. Now, Nirav, I'm coming to you on this one. I'm sure that you've done your studies about the implications for the earnings of some of these companies. In that list that we've mentioned or otherwise, has anything stood out to you? Anything particularly that you will change your view on based on a Trump victory?
Yeah, so I've got a very positive view now on oil. I think that's the cleanest trade, right? Because it's pro-oil, and you also want to give more licenses out and therefore push the production of the shale oil higher. And you put that against the construct of the fact that OPEC had a market share of about 57%. Now OPEC market share is down to 47%, right? So all the production cuts have been taken by OPEC, and the benefits have flowed largely to the non-OPEC guys, right? And therefore, it's just a question of time before OPEC buckles in. And therefore, the clear trade is therefore OMCs and stuff like that. So to me, that's a very, very low risk, high return opportunity that is in front of you. Outside that, I just listening to your anchor talking about, some sectors getting hit because of higher tariffs. I'm not very sure. So if you're increasing tariffs on everyone, it doesn't matter, right? So you're as good as you were yesterday. It's just that, it is the US consumers who are going to bear an increased cost. I'm not going to pay anything out of my pocket. I am worried about my market share in that overall game. So that is not very clear. We'll have to wait for as and when the policy happens. Also, please try and understand and appreciate the fact that, your election rhetoric is always very different. So it is not that everyone else is going to keep silent, right? So if you are going to impose 60% tariffs on China, China is a big consumer market for a lot of US companies, and they're not going to remain silent, right? So these are more negotiation tools, right? It's not that you're going to say this is what I decide and everyone has to abide by that. It doesn't work that way.
It's not unilateral, and ultimately
Absolutely.
we're talking about two of the largest countries and economies in the world.
Absolutely.
In the world, accounting for a very large chunk of global economic growth, right?
So think about it. The largest market cap company in the world is Apple, and if you got some restrictions on Apple's being able to sell something over there, you could lose 20-30% of your market cap.
Absolutely.
And that is chaotic.
It's a point well made. I will take your view, though, Ajay, as well. And by the way, I think that we're expecting to see some visuals of Donald Trump addressing the fact that the Republican Party, the grand old party, has managed to clinch control of the US Senate. And this is quite a significant victory because it means quite a bit, as Ajay has pointed out earlier on in this program, for the politics in the United States of America. What you're seeing is a stage, and I think that what is going to happen is he's going to speak about the victory that the grand old party, the Republican Party, has managed in the US Senate. They've done this after 4 years, and they've managed to flip a couple of seats, at least 2 seats, and that's how they've managed to win this. But Ajay, your comments, we've had Nirav pointed out that crude is something he's focused on, and of course, in the pharma space, one would assume that the counter to what Harsh was pointing out was that some of those pricing pressures maybe will ease out because the Democrats, I think, have been more focused on bringing down the cost of pharma.
Yeah, but they've not been very successful. If you see, these sounds are made every election, anti-big pharma and all those, but they are big funders of every politician, and they don't get changed. Ours are more generics. They, in fact, help to bring down the costs. So I don't think he will touch pharma too much, especially from India. We are helping them to reduce their burgeoning healthcare bills. So not too worried on that. In fact, I think India is better off with a Trump regime than a Democrat regime because they keep bringing in the non-existing human rights and religious freedoms and all those issues. In fact, people of Indian origin itself have brought in Kashmir issues, earlier. So all those things go off, and Trump is a realist, and he likes to negotiate. And with Prime Minister Modi and Trump, there is an equation. So we are expecting that strategic relationship of India to continue. There'll be less pressure on India to move from Russia as a big defense supplier. The Democrats were exerting pressure there. Trump is, somebody who negotiates with the Putin. You can expect some movement on Ukraine, some movement on Israel and Iran. All those will be positive for markets, Alex. So
Yeah.
Still we are compiling the list because we were not too sure which one comes.
Yeah.
And, once this is through. And we must also remember Jan 20th is when he gets inaugurated.
So there's still time.
There's still time, but
Yeah.
markets will move in anticipation.
No
Chinese will drop their currency, that I can write and give you.
Okay.
That's going to happen. And rupee will come under pressure. RBI is not cutting in a rush now.
Yeah, and
all those things will have an impact on us immediately.
We're already at all-time lows for the rupee, and we've already seen some action on the Chinese currency. Gentlemen, I know that I can speak to you for the next half an hour as well to find out what more we can talk about, but let's hold the horses till one of the two enters the White House or at least starts the victory march, if you can call it that. Nirav, as well as Ajay, thank you so much for joining in. Pleasure speaking with you on this program.